All right, I know many investors are interested in the semiconductor industry right now because of how artificial intelligence is changing and accelerating investments worldwide, and semiconductors are the category that are benefiting as a result. Taiwan Semiconductor Manufacturing Company is a great company to evaluate to consider the health of the semiconductor industry overall. So in this video, I wanted to take a deeper dive into Taiwan Semiconductor's management conference call with Wall Street analysts on October 17th because of the insights it provides not only about the company itself, but also the broader industry and how developments in artificial intelligence are progressing. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. So the company's CFO came on to say that their revenue in the third quarter increased by 13% from the previous quarter. Year over year, that rate of growth was much better. And that growth was supported by smartphone and AI-related demand. The surprising part there is smartphone. We all know that AI-related demand is increasing, but strong smartphone demand was a surprising note that came out from Taiwan Semiconductor from their recent quarterly results. The gross profit margin increased again by 4.6% sequentially to 57.8%, mainly reflecting higher capacity utilization rate and cost improvement efforts. Now, the reason why higher capacity utilization rates improve a company's profit margin is because the facility is already there. It's already experiencing a depreciation expense. It's already depreciating over the year. And so if you're utilizing it more effectively, if you're getting the full use out of that facility, you're getting better value. They already pay the rent for that facility. They already pay for the air conditioning. They already pay for the maintenance, etc. And so when you're producing at full tilt, you get a lower cost per unit because many of those costs are going to happen whether or not you produce 75%, 85%, or 95% capacity. So the closer you get to 100% capacity, the lower is your cost per unit. The reason why companies don't always go to 100% capacity is because the error rates start to increase the closer you get to 100% capacity, and the more difficult it is to reach 100% capacity. So companies like to operate at lower than 100%, especially when demand is not that strong. They don't like to go all the way to 100%. But when demand is as strong as Taiwan Semiconductor is experiencing, they can really push the limits to their capacity utilization rates to facilitate greater production, greater yields, and thereby generating greater operating profit and gross profit margins. Speaking of operating profit margin, that also increased by 5% to 47.5%, and return on equity was 33.4%. I've been saying for a couple of years now that Taiwan Semiconductor, its profit margins, company-wide, whether it's gross profit margin, operating profit margin, regardless of the margins you look at, they are industry-leading margins. You will be hard-pressed to find a manufacturing company that can generate profit margins at the level of Taiwan Semiconductor. They are very good at what they do, best in class. The CFO went on to say that HPC, which stands for High Performance Computing, in other words, the data centers optimized for artificial intelligence, that segment increased by 11% from the previous quarter, and it accounted for 51% of their total revenue in the third quarter. Smartphone increased by 16% quarter over quarter to account for 34%. One of Taiwan Semiconductor's primary customers in the smartphone segment is Apple, so this could indicate that Apple ordered a great more of its smartphones to be produced from Taiwan Semiconductor, or the work from Taiwan Semiconductor for chips inside of those smartphones, because Apple foresaw great demand for this next generation iPhone that just came out. Now, the company's balance sheet is in great shape. They have cash and marketable securities of $69 billion. That's in US dollars. And that's really helpful when you're operating a semiconductor manufacturing business because it's very capital intensive. each new facility costs billions, perhaps over $10 billion to build and maintain, and all the research and development that goes into generating the leaps in technology, it's expensive. And so you need capital, and Taiwan Semiconductor has the capital on the balance sheet. If it needs to deploy it, if it finds areas of opportunity, it can deploy, and it has deployed that capital. They go on to say that inventory days increased by 4 days to 87 days, primarily due to the pre-build of its N3 and N5 wafers. So what does inventory days mean? Well, the company has a certain amount of inventory, and they compare that with how many sales they're making every day. And then they compare and say, well, how many days of inventory do we have on hand? If we were to not produce any more, if we were just to rely on our existing inventory, in 87 days, they would run out of inventory if they stopped producing. And so when you see inventory days increase by 4 days, the next question becomes, why is the inventory increasing? There's two reasons why inventories increase. From an investor perspective, one is very good and one is very bad. The one that Taiwan Semiconductor is saying, the reason why they're saying their inventory increased is for a good reason. They're building inventory ahead of time in anticipation of an increase in sales. So that's one reason you build up inventory, right? Imagine yourself, some of you are small business owners that are watching this. If, right now we're entering into the holiday season, you might be building up your inventory in anticipation of strong sales during the holiday season. That would be a good thing, right? Another reason why your inventory might be increasing is because you ordered more than your customers want to buy. You miscalculated demand. And so you ordered 100 units when maybe your customers only wanted 25. And so now you're stuck with more inventory than you want. That's a bad reason, right? Or you invested to create this new product that you thought your customers were going to want, but turns out your customers don't want that product. And so you're stuck with more inventory. And so that would be a bad reason for inventory increasing. For Taiwan Semiconductor, it's the good reason. It's that they're anticipating strong demand for their products. For car companies, inventory is increasing for a bad reason, right? They overestimated demand, especially for electric vehicles. They overestimated how many people wanted electric vehicles. And so they built up way too much. And now those inventories are piling up. And that's a bad reason for inventory increasing. So whenever you hear a company talk about inventory increasing, it needs to have a follow-up answer. It's the reason why inventory is increasing. One could be a very good reason. The other can be a very bad reason. All right. And I'll end with the final comment on capital expenditures. The company saying that in US dollar terms, their third quarter capital expenditures totaled $6.4 billion. And compared to the revenue that the company is generating and compared to the demand for semiconductors that's anticipated over the next several years, this is a conservative capital expenditure total from Taiwan Semiconductor. Other companies in its category, Intel, you can see, are spending much more in capital expenditures. And in 2024, the muted amount of capital expenditures from Taiwan Semiconductor has been surprising. Even though they increased it from where they initially thought they were going to spend this year, investors and market participants were expecting significantly more investment from Taiwan Semiconductor, considering the boom in demand. And so they're taking a more cautious approach. They are increasing their capital expenditures, building new facilities, upgrading existing facilities to match the increase in demand, but they're doing it conservatively, which for industry participants is a good sign. Lower supply, if you remember from your basic economics class, supply and demand, right? When supply is lower, demand is increasing, that's going to create higher prices for their products. And that's going to be true for the industry because Taiwan Semiconductor is vital for the overall supply in the industry. If they are not increasing supply by as much as demand is increasing, that means that there's going to be upward pressure on average selling prices, which is good for the companies. It's good for profit margins industry-wide. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.